Billionaire investor Jeremy Grantham has over 50 years' experience investing in the financial markets. His company GMO, at its peak, had over $100 billion of assets under management, and Jeremy is highly regarded as an expert when it comes to market bubbles. Now, back in 2020, when Jeremy was warning of a major stock market crash coming, he was largely dismissed. However, here we are in 2022, and bonds have now crashed, tech stocks have now crashed, crypto's now crashed. However, interestingly, at the time of this recording, the S&P 500 is still only down 25% on the year. So, although a noticeable correction, it's certainly not one of the biggest crashes in history. And so in this video, we're going to find out the latest thoughts of Jeremy Grantham, including: is a major crash still coming? Is the market still massively overvalued right now? And where does Jeremy Grantham believe the market bottom is going to be? And how long will it take for all this to be over and we all begin making money once again? As always, if you do enjoy anything in the video, then drop a like, always appreciated. Okay, so first up, let's get a quick overview of 2022, and are we still on track for one of the biggest stock market crashes in history?
The first half of this year is about as fast as stock markets ever decline. I remember seeing that the first 4 months was the fastest decline in the S&P since 1939, when I was 1 year old and they were preparing for World War I. So that's a pretty good excuse to go down. And this was the fastest decline. This is about as fast as markets go down. And they always have good rallies. There's nothing as quick and spectacular as a bear market rally. They had one in late 1929 to early 1930, an absolute doozy of 45%. And of course, with historical hindsight, they signify very little, but at the time, they frightened the pants off the bears. And they give hope that all is over, all is forgotten, and it's back to the races. And I suspect we may very well have a pretty decent bear market rally as we sit. I wouldn't be surprised if this went on for at least another month.
So he says, as markets go, this is pretty much as fast as stocks will ever crash. And he also nailed the point about seeing strong bear market rallies, as we have seen a couple of bear market rallies in the last couple of months. The biggest being a 20% gain that happened in just 2 months. And since then, we've gone on to hit new lows. And so the next question becomes, so where are we when it comes to valuations? Is the stock market now back at fair market territory, or is it still massively overvalued?
And what the model says today, the model is calling for 20, which is very high, 20 on a Shiller PE. And the actual price today is 30 on a Shiller PE, down from 38. And 30 is very, very high. It's in the top couple of percent of all time. So we're still very, very exposed. And the model has been falling like stone because every month of unexpected inflation is cranking the PE down. So this decline has not even closed the gap. The model has been falling as fast as the market has been falling. So we still have this 1/3 gap. And secondly, as the Goldman Sachs and Morgan Stanley's begin to say, the second shoe is going to drop, which is profits. So you have even a mild recession, you get a big whack from profit margins, and the PE goes down, but also the earnings, you're multiplying it, goes down. So it is quite likely and plausible that the PEs will continue to drop and the earnings will drop in a recession.
And so what everybody is talking about right now are these continually raising of interest rates. But what most people are not talking about is the recession that we all have to go through as a result. And even though PE ratios have corrected, he sees the Shiller PE coming down to around 20, and the catalyst being falling corporate profits caused by the recession. And this will then bring us back to much healthier levels. And so this must mean that he still thinks a major crash is to come. And so to finish up, how big does he think this crash will be, and when will all this be over and we can get back to making money once again?
The entire bear market, it would be unusual for it to bottom out anywhere near this high. I would expect that by the low, that the S&P would have declined by 50% from the peak in real terms. So you do have to adjust the stock market for inflation. And also the trend. The trend in the market is a little over 4% a year. And as time passes, you should put that into the fair value. So a year from now, when the bear market might end, the trend line value would be almost 3,000 on the S&P. Of course, there's no rule that says you stop at fair value. Typically, in previous big bubbles breaking, they go down below that. They went down below, of course, in the housing bust of 2009. And they went down in every great bear market break, they went below trend, except Alan Greenspan's specialty in 2000.
Billionaire investor Jeremy Grantham remains strong that we're still only about halfway into one of the biggest stock market declines in history. He believes we'll be seeing the S&P 500 decline at least 50% to around the 3,000 level. And he believes stock valuations still have to come down and price in the fall in profits caused by the recession. And he sees this bear market to be over around August time next year. Now, it looks to me that all these crash predicting experts are now having their time in the sun. But it does make me think, if we didn't go through a global pandemic, which was a true black swan event, which none of them predicted, would we even be going through this crash? However, now that is besides the point, so let's finish up with some more positive, solution-based guidance. So when it comes to what to do, history says that buying stocks after a 30 to 50% decline has been one of the very best times to get rich if you have a strong cash position, a strong stomach, and a healthy dose of patience. And if you literally don't have or don't want to invest any more money, then we could follow the great advice from former Fed Chair Alan Greenspan when he said, simply buy stocks and then forget that you have them. As the US stock market has always gone on to recover from every single bear market and crash of the last 200 years. And for now, just to say, if you did enjoy anything in the video, then drop a like and a big thank you to everyone who does, and I'll see you in the next video. Bye for now.